Welcome to The Explainer. Today, we're pulling back the covers on the beds and furnishings industry. And what we found is a real head-scratcher, a story of steady growth on one hand and just immense financial pressure on the other.
So, at first glance, you might think things are looking pretty good. I mean, sales have been creeping upwards, right? It shows people are consistently buying. But then you look over at the profit margin, and the picture changes dramatically. It's just over 1%. For any business, that is an incredibly thin, almost non-existent cushion.
And that, right there, is the big mystery we're going to unravel today. How can an entire industry be selling more stuff, but making almost nothing on each sale? Let's dig into the numbers and see if we can solve this puzzle.
All right, let's get into the nitty-gritty. We'll start with those headline numbers from the last 3 years, because that's really where this whole story kicks off.
And wow, this chart really tells the story, doesn't it? Take a look at those blue bars for revenue. You see that slow, steady, predictable climb. But then, look at the green bars for profit margin. They just absolutely collapse, from an already modest 3.2% down to rock bottom, and they've barely recovered since. It's a really stark contrast.
I mean, think about that for a second. A 1.1% margin means for every $100 of furniture they sell, after paying for everything, they're left with just $1.10. That is a razor-thin buffer to operate on, which of course leads to the next big question.
So, if the money's coming in the front door, where on earth is it all going? To figure out why those profits are vanishing into thin air, we've got to follow the money.
Aha, and here it is, the big one. A staggering 84% of every single dollar of revenue is immediately eaten up by the cost of materials. We're talking about the wood, the foam, the fabrics, the very things you need to make the products. This one single cost just completely dominates the entire financial picture. But here's the thing. It's not just about materials, as huge as that is. As you can see here, other costs are creeping up too. Direct labor is on the rise, and look at this. Repairs and maintenance expenses have literally doubled in just a couple of years. All of this just adds more and more pressure on that already tiny profit margin.
Okay, but it's not all doom and gloom on the expense sheet. There is a little bright spot here. The industry has actually done a good job of cutting its finance costs by 1.3 percentage points. That's a pretty big improvement, and it tells us they're getting smarter about managing their debt.
All right, so we've talked a lot about the squeeze on profits, but let's flip the script. Despite all that intense cost pressure, there are some really powerful market forces, tailwinds, you could say, that are pushing the industry forward. Let's look at what's fueling all that demand.
And hey, don't just take it from me. This is straight from the horse's mouth. Management within the industry is painting a very optimistic picture. They see a really favorable environment for growth, and it's powered by some big, long-term trends.
So what's behind all that optimism? Well, it's built on some really solid, real-world trends. You've got more people moving to cities and needing to furnish new homes, a growing middle class with more disposable income, and, of course, the massive explosion of e-commerce, which is opening up totally new ways to reach customers. So the key takeaway here is pretty simple, right? While the internal cost situation is a huge challenge, the external demand from customers is strong and getting stronger. You could say this growing consumer base is the industry's single biggest asset in its fight against those rising costs. Okay, but there's always another side to the story. Now we need to talk about the headwinds, the serious risks that could really throw a wrench in the works and derail all that potential growth. And this is fascinating. Right here, management is basically telling us, point blank, what we already saw in the numbers. They are identifying the volatile cost of raw materials as the single biggest threat. This isn't just a line item on a spreadsheet for them. It's the #1 risk to their profitability, and it's a big one. And it's not just about materials. They're juggling a whole bunch of other risks too. Think about it. You've got global supply chains getting disrupted, which causes delays and price hikes. You have fierce competition from smaller, local players who can often undercut on price. And you have to constantly keep up with fast-changing design trends. It's a lot to handle. So if you boil it all down, this is the core struggle. The big dilemma for these companies. They're getting squeezed. They've got costs rising on the inside, and from the outside, they're facing intense pressure from competitors to keep their prices low. It's the classic rock and a hard place scenario. All right, we've looked at the good, the bad, and the ugly, the profits, the costs, the tailwinds, and the headwinds. Let's pull it all together for the final verdict on the state of the beds category. When you lay it all out, the picture is actually crystal clear.
First, the market itself is healthy. People want and need these products, and that demand is growing. Second, profits are getting absolutely crushed by high and rising costs, especially materials. And so, third, the only way forward, the only way to succeed is to get a lot smarter, a lot more efficient, and more innovative in how you run the business itself. Which leaves us with one final, kind of provocative question to chew on. For an industry that's operating on margins this thin, is the future going to be defined by product design or by pure financial discipline? The key to winning in this space might not be found in the showroom, but on the spreadsheet.